India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studio. I'm Sonia and today with me Nigel and Surbhi, and good tidings for the market, guys. The fourth day running record highs and doesn't look like it's stopping anywhere.
Well, that's right. And what about we have the newly crowned most valuable company globally, NVIDIA.
NVIDIA has dethroned Microsoft. It's taken away the top honors. The monsoon finally seems to be arriving here in Mumbai. So I think the market's got a lot going on today.
And finally, it's cooled down a little bit, right? The weather, I mean, after really... Okay, those are images. With monsoons comes traffic and all of that as well.
The rest of the chaos. But okay.
We're okay with that.
It's good for what it's worth. Yeah.
As long as it cools off, we're fine. But
it could be a little bit of a tricky day, I think, so with regard to the weather forecast, because it's looking a little bit gloomy. Hopefully, it behaves itself. Not too much, not too less. So we should be fine by the time we're going home.
Okay, well, I think the bulls are fine as well. There seems to be no looking back for the bulls, at least up until now. Let's get straight to all the market action from the monsoon action. This morning, actually, the GIFT Nifty is suggesting a big start. So let's get it up on screen. The last time I checked, the GIFT Nifty was suggesting a start up almost about 80, 90 points, 93 points right now as we speak. So things are looking good. It's the fourth day of record highs for the market. In fact, the Nifty is now holding firm above the 23,500 mark, which has been a big resistance in the past. There's strong support that came in from the Bank Nifty yesterday. In fact, the Bank Nifty was up over 400 points in trade yesterday. So lots of participation, whether it was ICICI Bank, even some of the laggards like HDFC Bank are starting to perform. So keep that on your radar. But really, all the action has been in the US markets. The S&P 500 once again at a record close. The star of the show, as Nigel was pointing out, has been NVIDIA. NVIDIA has crossed Microsoft in terms of market cap, has now become the most valuable public company. And since the end of 2022, the market cap of NVIDIA has gone up 9 times. So, that's the kind of move that we've seen in terms of the stock as well as the market cap. But that will continue to be in focus across the globe. In our own markets, we have seen large buying both from domestic and foreign institutional investors. So once again, in 4 digits, DI is buying about 1,500 crores, FI is buying about 2570 odd crores. I think the only niggling worry is really what's happening with Brent crude prices. So the rise in Brent crude prices is something that's not going down too well with the street, almost at $86 a barrel now on Brent. However, it's a massive fundraising day today, so I'll watch out for a lot of these names, whether it is, Indus, Gland Pharma, Sansera, ZF Steering, etc. There's the Craftsman QIP, so lots to talk about. All of that and more coming up in a bit. But for now, things are not looking bad at all. In fact, the GIFT Nifty is suggesting a big start.
Yeah, absolutely. I mean, the market's been in blue sky territory and we're seeing incremental gains on a daily basis. But I mean, both US markets and, back here at home as well. So just a little more on the US market data, because we had a lot of different macro points come in there as well. Now, the industrial production number was actually red hot. It's the largest increase in the last 10 months that we saw on the industrial production side in May in the US. The gain was 0.9% month on month. It was way above expectations, 0.4% year on year. Again, much better than expectations, which were actually looking at a possible decline as well. However, the retail sales data was not that bullish, and the bond market reacted more to the retail sales data because US May retail sales growth came in at 0.1%, which was below estimates. The expectation was there will be a 0.2% increase. And not just that, the April number was revised downwards to a negative number. No growth, in fact, a compression in terms of retail sales, down minus 0.2%. And that's why the US 10-year yield, the 2-year yield, all of those yields were cooling off. There was about a 5 to 6 basis points decline, depending on which paper you're looking at. But the equity market had no such problems. It was all about tech stocks. It was all about celebrating NVIDIA. So that charge continued unabated. The market, by the way, is closed today, Wall Street, because of the Juneteenth holiday. So no cues coming in from the US overnight. Let's talk about our market. Just tracking the higher highs. Last 5 sessions in a row, the Nifty has been making higher highs. And it's quite a interesting juxtaposition over here. 23,389 exactly 5 sessions ago, and yesterday's intraday high was 23,579. So it's just been moving upwards in a very nice, upward trending slope. That's what we've got on the Nifty. Let's see if this can continue. It's got lots of ammunition, as Sonia pointed out. Those flows, institutional flows, are very strong. And finally, FPI buying is coming in. We saw what that did to the Bank Nifty yesterday, and banks, of course, finally beginning to perform. So let's see if there's any follow through on that. Plenty of block deal action. So a lot of these stocks, ZF Commercial and Indus Towers, Gland Pharma will be on our radar. And a lot of insiders are the ones who are selling big time. Nimesh will get us more details on this as we go forward. Good news for us in terms of tax macro, numbers for us, because the the direct tax collections so far are looking quite good. This is up till the 17th of June, so 22% up on the gross direct tax front. Net is up about 21%, and even the advanced tax number, look at that, almost 28% higher on advanced taxes. So things seem to be looking good here. Just one more point on taxation. Yesterday, Tim C was getting us a lot of exclusive information on potential discussions around GST. The Fitment Committee is recommending that the group of ministers studies a whole range of taxation across different industries. The two important ones that might stand out for the market would be fertilizer, because there's some chatter, there's some thought process around reducing the GST rate for fertilizers, and also watch out for tobacco and online gaming, because again, a lot of these discussions, perhaps, if they turn out to be favorable, could be working well for some of the listed companies as well. So plenty to keep us busy today.
Well, that's right. Surbhi, the point that you made with regard to the markets making fresh highs on a day-to-day basis is good. And yesterday we came off the least from the high of the day. In the previous week, we were seeing that we were unable to sustain at higher levels. So yesterday, in that sense, was a very, very good close. And with that sort of a backdrop, the question is, are we bracing ourselves for a fresh up move? Now that we have conquered the 23,500 mark on a closing basis, are we bracing for a fresh up move? The Nifty Bank, that's going to be the crucial one that plays out the weekly expiry. So that's going to be the one. Yesterday, it was in fine form, was up close to around 450 points. And no shocker coming in from the United States overnight, because in fact, those markets are shut, both the bond as well as the equity markets. What did the FIs do overnight? Well, they added 11,000 long positions, and they added only around 3,000 short contracts. So they're in a ratio of around 3:1. And that's why, in fact, they're still net short, but very mildly so. Now the short positioning is only at around 51%. And this graph tells you the picture, the kind of short covering that we've seen. From around 3.5 lakh contracts on the short side, we have come down to just 13,000 contracts on the short side. And now they'll, in all probability, by the end of today, they'll be net long, which makes it even more tricky, because earlier you had the benefit of seeing short covering that's pushing these markets higher. Now you won't have that cushion, but let's see how that goes. Now, in terms of the options data, well, a couple of strikes were fairly active in trade yesterday. The 23,550 call, 23,600 call. Between them, they added more than 25 lakh shares. So there was some writing that we're seeing out there. While on the downside, this is encouraging. In a market that's trending up, you had the 23,500 put that was active, 25 lakh shares getting added there. The premium was at around 61 rupees. On an average, that premium could be roughly around 100 rupees odd, which gives you the support level. Since the 23,500 put is seeing a fair bit of writing, this is your crucial support zone, while resistance comes in at these levels going by the options data. The Nifty Bank, it's close to around 1.5% away from its fresh all-time high, so you'll want it to go to that mark. If that's the case, then the Nifty will be well and truly on its way to above the 24,000 odd mark. Well, in terms of just one word of caution, yes, the Nifty moved up, but the VIX is well moved up, mildly so. So just thought we'll highlight that as well. And also the PCR is holding at around 1.3. Stocks that I'm looking at today, well, a couple of stocks have moved into the FNO band, so you keep an eye out on both these two. But the one that normally comes out of the FNO band, well, that sees some bit of action. And yesterday we had GMR reports that was up close to around 4%, so I'll keep an eye out on that stock. Among all the large trades that I'm looking at Indus, because that book has been upscaled out there. So we'll have to keep an eye out on that one. Vodafone Idea as well, because now there'll be various scenario analysis that will be playing out. And since they've gone ahead and upsized that book, now, in fact, Nuvama Alternate Research, they say that there could be global passive inflows of around $200 million into Indus. So both those two could be the stocks of the day.
Okay, thanks a lot for that, Nigel. Very helpful there, but plenty of market action and market views coming through for you in the next 2.5 hours, so don't go anywhere. On the equities front, first up, we have one of the best voices in the business, Mahesh Nandurkar of Jefferies, who says that their interactions with 50-plus investors in a recent US roadshow leads them to believe that the FPI flows into India would improve in the second half of the calendar year. as clarity on government policies emerge post-budget. He says aside from emerging market mandates, several global and international mandates are interested in new ideas, including real estate, infra, capital goods, state-owned entities, discretionary consumption plays, etc. He says continued delays in FPI registration is also forcing investors to consider ADRs, which augur well for HDFC Bank and ICICI Bank.
Okay, let's move on. Pramod Amte of Incred says major political event volatility was well praised by liquidity and hopes for policy continuity at most ministries. But delays and political rumors raise the risk. He says strong macroeconomic tailwinds and FY 25-26 estimated EPS growth outlook of 12% remain intact, favoring utility, consumer and capital goods sectors. He says he stays constructive on the market and looks for policy action and priorities in the budget slated for the end of July. He says they have added defensive stocks in their high conviction list.
Okay, let's also get you some money market views for the morning. Pankaj Chitlangia of First Basis says the daily dollar INR chart oscillators show bearish divergences, suggesting that it would be inclined to dip towards 83.28 with an outside chance to stretch lower to 83 to the dollar. He says resistance near 83.55 should cap the upside attempts. He says given the absence of major scheduled events, the dollar INR price volatility is likely to remain subdued this week.
On bonds, Neeraj Gambhir of Axis Bank says Indian bond yields continued their downward momentum on the back of lower than expected US and domestic CPI data. Moreover, he adds continuity in central government as well as portfolio allocation post-election gave relief to the market. He says the 10-year benchmark bond yield traded in a range of 6.97 to about 7.01% for the week. He expects it to be in a range of 6.95 to 7.05% on the back of expected FPI flows from the JPM bond index.